In this presentation, we will enter and adjust an entry related to unearned revenue into our practice problem for a private college within QuickBooks Pro, QuickBooks Desktop. Here we are in our private college practice problem. We currently have the open windows open. You can open the open windows by going to the view dropdown and selecting the open windows list. We're first going to take a look at our Excel worksheet to see what our objective will be. We are on 8C. Scrolling back down to number 8, we are here where it says increase in unearned revenue. So if we scroll back up, what's going to be our objective? You'll recall that the unearned revenue is going to be a liability account. This will be very similar to a for-profit type of organization. And the question is then, if we've received revenues in advance. So it's possible then that we've gotten revenues that we have not yet earned yet in the college. In that case, then we need to record them as a liability. So in essence, you can think of the journal entry in unearned revenue would be a debit to the cash account, but for the revenues that had not yet been earned, they should be allocated to unearned revenue as opposed to the credit to revenue in the case of having earned them. So in this case, we're basically saying, hey, there's been revenue that's been recorded into revenue down below. We're going to reallocate it, taking it out of the revenue account and allocate it where it needs to be, unearned revenue, because that revenue has not yet been earned. Our journal entry, therefore, will be a debit to the tuition and fees without donor restrictions. That's going to be the revenue account, going to be decreasing the revenue account. We're going to be increasing the unearned revenue with a credit. Let's see what that will look like as we post this out. We're going to say we got the tuition and fees. Here's the tuition and fees without donor restrictions. It has a credit balance in it. We're going to debit it, making it go down. So that decreases. And then the other side is going to be in the unearned revenue. So here is unearned revenue. We are in R15. Within R15, we will say equals. We'll point to that 10 credit, which will increase the liability in the credit direction. So there's our transaction. We're back in balance down below. Let's see what this will look like in QuickBooks. We will just be simply using a journal entry in QuickBooks as well. So we're going to go back to QuickBooks. We're going to go to the company dropdown. We want to then go to the make journal entry. It's going to be as of the 31st. So I'm going to close that out. We're going to say then that the debit will be tuition and fees without donor restrictions. So we're going to type in tuition and fees unrestricted. That is going to be for the 10. So I'll say 10. And then I'm going to put in the memo that this is an adjusting entry. And it's going to be class unrestricted. The other side then going to unearned revenue. So we're going to say unearned revenue. That's going to be a credit of 10. Again, it's going to be an adjusting entry. I'm going to say this is unrestricted as well. Recording this out, we're going to say save and close and say yes. Let's take a look at our trustee trial balance by going to the reports drop down up top. We're going to go to the accounting and taxes, and there is our trustee trial balance. We're going to change the dates up top from 01/01/20 to 12/31/20. We'll then change the font size in the customized reports, fonts and numbers, changing that font size back up to number 11. Okay, yes, and okay. So there we have it, and our entries then are going to be a liability account, unearned revenue. There it is. Double-clicking on that, we see our adjusting entry for the 10. Closing that back out, the other side is going to be in the revenue account. So scrolling down to the revenue account, we have the tuition and fees unrestricted. Double-clicking on that to zoom in there, we see our adjustment for the 10 there as well. Then we would typically want to double check, I would typically double check the profit and loss by class to make sure that we have classified properly. We're going to go to the reports drop down, going to go to the company and financial. We'll take a look at that profit and loss by class, changing the dates up top once again to or from 01/01/20 to 12/31/20. And then notice that nothing has popped up that says unclassified. And that's usually the row that would pop up if we had not assigned a class. And if that was the case, not really a problem. We can go back in there, zoom into that item, and then properly classify it as we go. So that's going to be a useful tool there. You want to classify everything typically, and then if that unclassified column shows up, something hasn't been classified, and we can simply go back in and do so.